What's up, people, and welcome back to the episode 3 of this YouTube series or the challenge $200 to four figures, trading the right way and following the right trading principles. So, the second trade I took so far came out to be profitable. Right, you're going to see a screenshot attached to this video. And then now in the remaining part of this video, I'm going to be explaining how I anticipated the move, how I spotted the move, how I was able to enter. I actually missed the trade and how I was able to re-enter following the same criteria and then capitalizing on the whole trade. Even though my TP was way higher than what it is, right? I got stopped out in profit. How I was able to manage the trade as a whole and come out profitable. Okay, that's what the remaining part of this video is going to be explaining to you guys. And now, before we get into that, I want you guys to do me a favor. Hit the thumbs up button, smash that subscribe button before we get started. And why should you do this? Because when I tell you the things I'm dishing out right here in this video, the things I'm doing in this channel, a lot of your mentors are charging hundreds and thousands of dollars to teach. I can say I'm one of the few traders online here on YouTube that goes in depth explaining and breaking down every single thing. Most of the things I'm doing here is premium. You get paid. People pay to learn these things that I'm dishing out for free. So all I ask in return is just hit that like button, hit that subscribe button. That's the only way to show me appreciation. Let me know that what I'm doing out here is being appreciated and you guys are also benefiting from it. That being said, thank you very much for the subscribe. Enjoy.
What up? What up? All right. So after the fall of yesterday, we have this. After the push of yesterday that took me out, the market eventually started falling. So which means my whole analysis was right. But you know what the market can do. It can take you out and then go your way. So it is what it is. That's, by the way, that's in the past. You don't dwell in the past trades. You move forward. So now, like I said, this is a key level of supply on the 4 hours, and this is a key level of demand on the 4 hours. We can see that price came back into this area of demand and then rejected from there up. This was PPI, and now we are having a downtrend. Okay, so now in my own opinion, as long as price doesn't take out this high for us to have this if price doesn't take out this high, to me the whole trend is still bearish regardless of whatever it is showing. Now in my own opinion, I just want to look at how price is going to react. Are we going to take out this low here, or we're going to continue higher? So until then, I have no setup, and this is Friday. This is already 5:40 as at the time of recording this video, 5:40 p.m. So the market closes in a bit, and I have no trade. As you can see, this is why it's very important for you to know, you don't just trade every demand zone or every supply zone. Now if you look at this here, yesterday, when there was an uptrend and then I hit my stop loss, right? This became a breaker block to the upward side because we broke through this level, all right, giving us a change of character on the 30 minutes time frame. So had it been I didn't have my higher time frame, analysis, and I'm like, oh, price is going up, let's enter here and continue long. As you can see now, price come down, price has come down, taking it out, and it's still coming. Most likely, we don't know what market is going to do, but what I'm just trying to say is you want to trade in line with the higher time frame. I see a lot of people going to the 5 minutes to mark out demand zones and supply zones. Well, if it works for you, fine, but you want to make sure that the demand or supply zones you are trading is in line with the higher time frame. That way it has better chances of working out. So for now, okay, I have no setup. I'm just going to watch what the market is doing and I'll update you guys. You do not need to trade every day. Let me say this again. Okay, why you are trading is because you have an urge in the market, and an urge is not something that shows every single day or every single minute. Well, if you trade the lower time frames, maybe it's going to show, but if you trade the higher time frames, then you can go for refinement on the lower time frame. You cannot see setups every single day. Less is more. wait for the market to give you a confirmation based on your edge, and then you capitalize on it. That is exactly what I'm doing. So I'm not flipping in this challenge. I am growing an account the right way. Once I see a good, structure in line with my strategy, I execute. Win or loss, we move, as long as the risk management is in key. All right, so I'll catch you guys in the next one. So now this is a bullish breaker block. Let me zoom in and see what happened. So we've been in a downtrend, and this was PPI, yes, which I intended to take sales, but stopped me out, and then we came down. I already explained that in the previous recording, so no need to repeat myself. Now, here's the thing. Whenever I see a change of character like this, it simply means this whole area, is an area of interest. It's a point of interest or area of interest, anyone you want to call it, for buys. However, you want to wait for confirmation. See how price reacts when it comes back there. Then I like to trade trend continuations more than reversals. So you can see we came down. This formed a bullish order block here. This is a bullish order block on the 30 minutes time frame. We'll still go to the higher time frame. All right, we're seeing something here, and then price came into this huge fair value gap here, and now we are having a reversal to the upward side, which has now broken structure, giving us a bullish, a bullish breaker block. But that is not enough. We need to see what the higher time frame is doing. Let's look at it on the 30 minutes first. Sorry, on the 15 minutes. Okay, looking good. Let's look at the higher time frame. So this is the 4-hour time frame here, and on the 4-hour time frame, what can we see? Beautiful. We can see here price went up, came down, and then we have this this is like a doji candle, and now we had this impulsive move up, showing high buy pressures, and then now we are continuing higher. So which means this is a change of character to downward side, right? We haven't broken structure to the downward side yet, being bearish, although yeah, the market is bearish, and now we have this correction. So if price can go like this, I want to say something like this. If price goes and takes out this high, the next place price is heading for is this 4-hour order block. This area of, this 4-hour order block here is the next place price is heading towards. So now we know where price is heading towards. We can now, where is price coming from, and then where is price heading to. Okay, so let's look at the daily also for better and more clarity. Okay, because I am very, very selective with my trades. I'm a picky person. I don't just take anyhow trades. I want to make sure that I'm seeing something. So now if we look at this on the daily time frame, this was our last break of structure, and then we had this bullish breaker block. Now if we look closely, we'll see that price has been respecting this bullish breaker block since. We haven't closed below it. We have just been having rejections from it. Look at this. So this is it. We haven't taken out this low. We came here, rejected, came here, rejected, came here, rejected, came here, rejected, came here, tapped deep into this 4-hour level of demand here, and immediately we had a rejection, right? And now we are seeing again the next candlestick bearish, get to this point, rejecting. So this area becomes a very strong area of demand in which price is failing to break through. And what is going to happen when price keeps rejecting from a place, yes, it might be getting weaker, but at the same time it could also become a new impulsive move for price to go from this, and then we take out this high like this to then continue higher. So it's safe to say that the next thing is, especially after this huge rejection, we might have a shoot up in price to now pick out this very high like this, which is sorry, what's wrong with this something? I want to delete this. Yes, which will now take out this high. So now we have our direction. we know that okay, it is still safe to say we want to take longs. In a way, it is safe. So now let's look at it on the 15 minutes time frame. On the 15 minutes time frame, uh, this is the line. So we can see inside that line below it that we had the rejections. This is a demand zone that has been formed, a bullish order block here. This, if I want to draw this like this is 15 minutes. I just want to take a quick look on the 15 minutes. I'll go higher. Okay, so let's move to the 30 minutes time frame here. Alright, so on the 30 minutes time frame, this is what it is looking like. It's looking like this on the 30 minutes time frame. Okay, so now if I'm going to be taking a longs, although today is Friday, I'm going to be taking a longs. Now, where is price heading to? Price is heading to this point. Very, very obvious. We are heading towards this point here. Okay, so now that we know that, we can join the trend to go higher, because now this is a clean confirmation. We came into this area of fair value gap on the 30 minutes time frame, and now we are reversing back up. We had a break of structure. That's a clean confirmation, okay, that we can go longs. Now, how do I want to enter? That's another thing. So on a bullish breaker block, you want to make sure that there is fair value gaps paired together with that breaker block, so that we can, it's a one-time use, so we can enter and then continue higher. So you want to refine the entry like this to the open of this candlestick, this particular candlestick, and then like this. So this becomes my area of demand. This becomes my area of demand. But this is a very, very wide stop loss, man. This is a very, very wide stop loss. This is going to be my area of demand if I'm to enter like this. So technically, it's going to be something like this. Have a long position. Entry is at this point. Stop loss, I'll add like 5 extra pips, something like this. And then take profits is like this. This is a 1 to 3 risk to reward ratio. It's not bad. It's not bad. It's a nice one. The thing about trading is the stop needs to be where the stop needs to be. You can't say, oh, this looks big, you need to have a wider stop loss or something like that. No, the stop needs to be where the stop needs to be. Let me look at the 15 minutes time frame if there's any refinements I can do. Okay, you can see in the 15 minutes time frame it also pairs in line with the entry here. What's the entry? The open of this candlestick is 147.054. okay, let's do that. 147.054. Entry 147.054. okay, nice. And then stop loss is going to be the bottom wick of this candlestick, which is 146.736. all right, so stops 146.736. That's the stop. Now I'm going to add 50 pips and 50 points, which is 5 pips, to give my trade a room to breathe. I don't want to have a tight stop loss like that. So if I add 50 with this, that's going to be 68 here, and boom, this is my stop loss. Okay, so refined. And then what is my take profits? Let's look at it on the 4-hour time frame. Okay, on the 4-hour time frame, take profits is going to be this low here, which is 148.147. so now here's the thing about how I trade. I don't say, oh, I need to hold on. 148.147. 148.147 take profit. 148.147. Is that it? Is that correct? Yes. So now I don't trade, oh, this has to be my risk to reward ratio. I need to trade a 1:8, 1:9. No, 1:2, 1:1. It's price action. Okay. Where is price coming from? And where is price headed? That is what you need to do. So whatever risk to reward ratio that comes out from that is what your trade is meant to be. But if the risk to reward ratio now comes out to be too small, then you can decide not to take the trade. Maybe it came out as a 1-to-1, and you don't want to take a 1-to-1, then you can decide not to take that trade. However, saying that you need to take a particular fixed risk to reward ratio might work in your system, but in my own system, I'm trading from one level to another level. So now this is one level. I'm buying here after a confirmation so that I can sell it back at the top. So this is exactly what I want to do, and like this we go like this. It's as simple as this. So this is exactly what I'm looking at. So I'm going to be placing an order on this trade because this is looking very, very clean, but most likely this trade is going to be held until next week. That's if I get tapped in. It's going to be held until next week because the market is closing soon. On the 4-hour time frame, this is what it looks like. This is what it looks like on the 4-hour time frame. Looks like this on the 4-hour time frame. We might have this push down and then continuation, and it might not tap me in. And if it doesn't tap me in, we'll still look for a continuation in between. But I know price is headed for this unmitigated supply zone here. So that being said, let's look at it on the daily time frame for the final confirmation before I place order on this trade. So we have it like this on the daily time frame. This is it on the daily time frame. We can see we have this wick in and then a rejection, most likely. And another thing about candle science is, in candle science, you want to make sure that this next candlestick doesn't close below this candlestick. As long as this candlestick doesn't close below this candlestick, it simply means price is not going lower. But that's another concept entirely. All right, but from what I'm seeing here, the next candlestick can be bullish and might continue higher. Okay, and again, lastly, again, if I'm going to place order on this trade because this is very, very nice. But again, even when price keeps going up, I might still see opportunities to continue the trend, and then I take in more positions, after some more break of structures, new breaker blocks, bullish breaker blocks. That's if price respect this. I might still take some continuations inside and take the trade. But for now, I'm going to place this limit order and we'll see if I get tapped in. Let me set my alert entry at 147.054. 147.054. So I set my alerts there. If I get tagged in before the market closes, fine. If I don't, I leave the order until next week. But I really hope, and I really want price to tag me in before the market closes. Why? Because most of the time when market opens on a new week, it usually gaps. So if it doesn't tag me in and maybe it goes something like this, price could gap in on the new market open. But hey, I'm not the market. Whatever happens, happens. Let's look at it on the 30 minutes time frame here for final confirmation, and we'll see how it looks like. 30 minutes time frame. So beautiful. This is it on 30 minutes time frame. It's looking even more clean. It's still the same thing. 2.9, almost 3. Fine risk to reward ratio, by the way. All right, so I'll catch you guys in the next one. Yeah, good morning, people. This is a Saturday morning, so the Forex market is currently closed. This is 8:17 in the morning, and let's take a look at the pending order I had. So like I said, price came very close to the entry. I was hoping it would tap me in and then I'll hold the position through the weekend, but it was close. It was close to entry. Now that's another thing. Let me drop a tip about trading. Okay, you don't want to chase price. Stop it. Stop chasing the market. Allow the market to come to you. Okay, allow the market to come to your level of interest. If it misses you and go up, fine, totally good. You find another opportunity to trade. But if it taps you in, beautiful. Now you are entered at the price that you actually truly want to buy it. You want to buy at the best price possible. And also, if it stops you out after taking you in, no problem. You move on to the next trade. All right, that is it. So why I'm also doing this is so you see, I'm trying to keep myself disciplined. It's not easy, I understand. Okay, it gets easier over time because the way I'm disciplined now, some of you might not be that disciplined in trading, but it is something that is achievable. Okay, it's very, very achievable. Set your goals, set your entries. You see, your strategy, or you see your edge in the market. Set your limit order and wait for price to come to you. Do not chase. Right? So now imagine I say, okay, I don't want to miss this move. Let me enter in this break of structure line. Yes, I'll have been in the trade right now, but I'll have been in a drawdown. Doesn't mean also that if it comes here, I will not still experience drawdown. I might even get stopped out, or it might go my way. But this is where I want to buy. Okay, as long as this is where I want to buy, I wait for price to tap me in there, or it doesn't. Either ways, I'm cool. So what am I looking at on Monday? The same thing I said. What I'm expecting on Monday is going to be price gapping down into this entry and then continuing higher, and it might gap down, and then if it takes out this low, then we are going to have a change of character to the downward side again, but which is highly unlikely the way I see it, except there is some crazy news that happens at market open. But if not, yes, we are going to gap down, and after we gap down, we continue higher because we've already formed some strong areas of demand in this point. And then, like I said, if the price keeps going well and I see another opportunity to scale in, I'm going to scale in to maximize this whole move. Okay, that being said, that is all for now until market opens. When the market opens, I'll keep you guys updated. So that is it. I'll catch you guys on Monday at market open. Have a great weekend. Enjoy life. That's trading. Trade Monday to Friday. You don't have to trade every day though. Okay, you wait for your opportunity to come to you, and after that you rest. You just do other things. Enjoy life. Go out with the family, watch a movie, play games, and all work and no play makes Jack a dull boy. I'll see you guys on Monday. Okay, what's up, people? This is Monday Asian session, 12:14 a.m. in the morning. So as you can see, this was where price was during market close, and then we came close to the entry, and now we are beginning to see the push up. Like I said, the overall move, I was anticipating for something like this, down, in, and then boom to this wholesale, right? So now as price is looking, it's looking like I've missed my entry. Now this is what you do when you miss an entry. You don't chase price. Okay, you don't chase price and be like, oh man, let me just buy at market order right now because it's like price is going. Because let's look at it on the higher time frame here. This is the daily. We are having already a push up. Okay, it came close to our entry, and then let's look at the 4-hour time frame also, so you can see we are having this significant volume, exactly what I anticipated for the market to do. So now what am I looking forward to do? If you can see on my screen record, you are seeing this is an alert sign. Now let me explain to you why that is. Because the moment price takes out this high, we are going to have a new break of structure. Hence, this point is going to become another zone in which I'm going to get a re-entry like this. This is what I'm talking about. So this point is going to become another point in which I can re-enter, but price has to break it first. That's why I have my alerts here. So I'm going to be looking forward to this point. Is going to become a new entry. So this is going to become, it's going to be something like this. I'm not placing the order now, okay, until price gets there, but it's pretty close. So my new setup now, here's the thing about missed opportunities. If you know what you're doing, if you know what you're doing, even though the opportunity is missed, this is kind of like, it can end up to become a blessing in disguise. You understand why? Because now I'm going to get a better risk to reward ratio on this trade. So if price goes up above, breaks this high, excuse me, I'm going to be entering around here. Then my stop loss would be somewhere down below here, because this is going to be the new fractal low. This is the demand area. This is going to be the new demand area after price has tapped into this fair value gap. It tapped into this fair value gap but didn't dip as much as I wanted to enter, and then boom, we're having a strong demand. So, and then the take profit will still be the same place. This was what I was talking about. If price taps me in, I might be looking forward to adding more into my position. I might be looking forward to adding more into my position so that I can capitalize on the whole move. So now, me missing this 2.97 risk to reward ratio, I'm going to be entering to capitalize on a 4.14 risk to reward ratio as soon as price breaks through this high and closes above. Okay, I wait for candle closes above, so this point becomes a break of structure like this. This is going to become a new POS. Now, why am I saying I know? This is the same thing for those guys that say, "Oh, don't trade with indicators, blah blah blah." How do I know this point is going to become a POS? That's because I understand what market structure is. Okay, now price has already hit there. Price has already hit there, but I'll wait for the candle close. So this is going to become a new BOS, and once you see now the indicator marks it exactly. So this is a new BOS. When I tell people using the indicator to trade, I'm very glad I was able to catch this live. I literally said this is going to be a break of structure before it became a break of structure, which means I know what break of structures are, but I just use the indicators to make my life much more easier. So basically, you want my entry to be at this open. Let me just do it now, but I won't set the order until this candlestick close. So the open of this candlestick is 147.287. I'm glad I was able to catch this live. So 147.287. Really glad I was able to catch this live in front of you guys for you to see on the record. And then that's my entry. Beautiful. My stop loss is going to be this fractal low, but let's wait for the candle close first. But this is really nice, because now if we zoom in clearly to this, you will see that this is a new breaker block paired together with a fair value gap. So boom, and then if we have the new candlestick, we're going to have it paired together with a fair value gap. So price can then do this. After coming up like this, price can then come in to this fair value gap, which is also going to be my entry, to then continue higher, which will now also be a new break of structure. And then we keep going like that until we get to that top. All right, so I'll update you guys once I place the order after the candlestick close. Candlestick closes in 10 minutes. So once this candlestick closes, I'll be placing my order, my entry at 147.287. Okay, beautiful. And stop loss, it's most likely it's going to be at this fractal low. That's for a 4 point, literally a 4 risk to reward ratio trade. Okay, so I'll catch you guys once this candlestick close, and then I place my order in front of you guys for you to see. Until then, peace out. So the candlestick closed, but it failed to close with a body above this high. Okay, a wick doesn't count, so hence that is not yet a true break of structure. So I'm not still placing my order yet until I have a candlestick that closes with a body that breaks above this high. Only then would this point now become a valid breaker block to trade off continuations with. So hopefully this current candlestick can be the one to close with a body above. I would have loved to enter, but it didn't close, so I still have to wait. It's all about patience. Trading is about patience. You don't chase the market. You wait for your setup, your edge to show itself to you clearly. Then you capitalize on the trade. If it's a win, you know it's a win by the book. If it's a loss, you know it's a loss by the book. You follow your strategy teeth for teeth. That's what makes you a profitable trader on the long run. You could take the first trade and be it a loss. You could take the second trade and it's a loss. You could take the third trade and it's a win, and it covers up for your two first losses. That is trading for you. So if you are all over the place, not following your strategy, jumping from one strategy to another, not waiting for confirmations and every single thing, every of your criteria as a trader, you should have the criteria that needs to be met before you take your trade. So if you don't have all of that and you jump into the market is merciless. It will take your money away. So I'll make this record. I'll continue this record once there is a candlestick that closes above this high with a body. Then I'll take my entry, and we'll see how price goes from there. But I'm pretty confident that we are on an uptrend to this very high here. So it's all about me finding a way to join the continuation. This is already a missed something, but I'm not canceling the order yet. But once there is a confirmation and then a candlestick closes above this and I place an order for this, then I'm going to be canceling this. Alright, see you guys. Alright guys, I had to quickly do things faster. I couldn't record because the way price is moving right now is crazy. I'm currently in a trade. Let me screen record it by the side so that when this video is being posted, you see I'm currently floating about $4 in profit, so thereabout. Okay, so how did I enter? I had to come down to the 15 minutes time frame because on the 30 minutes time frame it was looking way slow. So if you look at it on the 15 minutes time frame, you'll see that this point is a breaker block, so which means my entry was refined like this. So this became my area of interest. As you can see, we already formed buy order blocks at this point. Already formed buy order blocks here. This was a breaker block. Price came down to this point close to my entry, but didn't hit my entry, and then reversed back up, and then this was a breaker block, and this was a fair value gap paired to it. So I set my entry back at that breaker block, and you can see price dumped back into this breaker block to then continue higher. So basically that's it. I've already deleted this order. Okay, I've deleted this order and this area of interest. Price is no longer coming back there, so I had to drop down to the 15 minutes so I could not miss this move, because the way price was going, I'll be so mad if I missed the move. Waiting for a breaker block on the 30 minutes time frame. As you can see on the 30 minutes time frame, you can see that we are yet to have a candlestick that closes with this breaker block. Okay, see, this candlestick is still forming. All right, this candlestick is still forming, which means this breaker block is not yet complete on the 30 minutes time frame. But if you look at on the 15 minutes time frame, we already had that breaker block formed already. So that being seen, I had to just quickly set my limit order. I got tapped in at the price. You see the price 147.257. that's the price I entered. You can cross check it with the screenshots when this video will be out, and you see that's the price I entered. So it's not like I did anything fishy or all of that. So now the price is running. Now this is how I'm going to manage this trade. This is a 3.92 risk to reward ratio. Okay, so once I hit 1 hour on this trade, I'm going to be taking partial position. Okay, I'm going to be taking partial position. When growing a small account, you want to take profits as soon as you can. Doesn't mean you leave your trade. Well, some people can leave a trade and be like, okay, they're running for their full TP, which I will be. Okay, but once this trade hits a 1:1, I've already set it manually, sorry, automatically, because I also have a MetaTrader on my desktop, my PC. So I already set it. I set my TP at 1 hour. I opened two positions, 0.02 lot, two different positions. You will see a screen record of my trade as I'm talking in this video. I'll place it by the side. So once one hits 1 hour, it's going to close, and then the other one I set a trailing stop loss of 227 points, which is the points of my stops here. So immediately this price gets to 1 hour, the other second position will move to break even while the other one closes. And then once it moves to 2 hour, the stop loss is going to move into 1 hour locking in profit. We get to 3 hour, my stop loss is going to move to 2 hour locking in profit, and like that until we hit our full TP. So if there's any sharp reversal, I'm going to get stopped out in profit. But for that to happen, this trade needs to hit a 1 hour first, which it should with the volume. So once it hits a 1 hour, then literally I can no longer lose money on this trade again. So that being said, I'll catch you guys in the next record I'm going to make. So until then, let's see how it plays out.
Alright, good morning, people. I'm waking up to this trade right now, and I got stopped out in my trailing stop loss. This is 9 minutes after 8 this morning, so I got stopped out in trailing stop loss. So let's take a look at it at the 15 minutes time frame. Okay, so with the 15 minutes time frame here, we can see price went up almost like 1.6 R or 1.7 R, because I have some alerts marked out. I wanted to see this. I set an alert at 2 R. This is 3 R. Alright, so price came close to 2 R, but I took partial profit at 1 R, and then price stopped me out. Price stopped me out at my trailing stops for my remaining position. Now, what do I have to say about this? There is this thing that Yarimi said. A lot of you know Yarimi, but if you don't know Yarimi, you look him up. He said a lot of you will be up a significant amount of money, and then you watch price come down to stop you out without doing anything. Why? Is it because it's digital? Is it because it's numbers on the screen? You know? And that's very true. You want to grow an account. A lot of you will have been up this particular point, and then maybe your SL will still be where it is, and price might come back. Now that is an alert triggered back to my break even. A lot of you guys will come back, and then this price, maybe you just moved your SL to break even, or the SL is still there like that, and then price will come back to stop you out after being significantly in profit, because you want to be correct, you want to be right, you want that dopamine of I did the 1 to 3, 1 to 5 risk to reward ratio. uh I did it, and price tapped my entry, sniper entry, and it went to full TP. There's this thing that Sully also said. Okay, Sully advice on YouTube. He said at the end of the day, if that money is not in your account, okay, you're just taking screenshots. You're playing a game, okay? You're playing a game. If you're not securing profits. Now, I don't mean you should not start trading 0.5, but trade management plays a vital role, okay, in how you grow your account. You can be right about the bias, and price goes in line to your direction, but doesn't hit your TP and then reverses on you. How you manage that trade is just as important as how you were able to figure out an entry, or how you were able to trade that trade, the strategy. Sometimes it's not really about the strategy, sometimes it's about the trader. It's not even sometimes, it's mainly about the trader and not the strategy itself. Look at it on the 4 hour time frame now. See what it's doing. It's coming down to stop loss. It might still go back up, but that's not the point of what I'm trying to bring out here. I'll wrap up with this. Wanna be champ Dan Cheng on YouTube, because I do follow a couple of traders. Okay, that's where I learned my trading from. He said 1%, 2% is a lot of money. Okay, you need to learn how to respect money, so that in turn money can respect you back. Those 1%, 2%, 0.5%, it compounds on the long run. Now on this trade, I was able to secure, you will see the screenshot.
or video save. Let me even make a video record right now. So you see it. Let me refresh the account. Alright, so on this trade I was able to secure about, where's the close position, about $4.37 on this trade. My TP was supposed to be way more than that, but still I was able to come out with $4.37 out of this trade without it going to my full TP. Why? Because I'm respecting money. I respected money. The market gave me a significant amount of profits, and then I took some, set my stop loss to break even initiated a trailing stop. Then I went to sleep. It's not your father's money that is in the market. Now I'm talking, this is like an advice. It's not your father's money that is in the market. Okay? So when the market gives you money, when the market rewards you for your effort, just imagine how painful it will have been. I've been making this record, this analysis since like on Friday. I've been making the analysis since Friday. So it's like me going to work on Friday through the weekend, and then on Monday, and then your boss says, on this trade I'm going to pay you so amount of money. But after that day was like, oh, I don't have up to that amount of money, but take this. The market gave me this. And you tell your boss, no. TP or SL, TP or SL. If it doesn't, if you're not giving me the full money, don't worry about it. In fact, take this one. You're now giving your boss money. That's how most people do. They even give the market money. They are risking maybe $4 on a trade, and they are up $10. They don't do anything. And their boss has given them $10, but they refuse to take a little bit out of it. I'm not saying you should take all and kill your whole risk to reward ratio system, but in the beginning of this series I said something. A lot of trades that ended up as break even. If you're able to secure something out of it, on the long run it compounds. $1 here, $2 here, $1 here, $2 here, 5 places, your account is already up where it could have been down. So guys, when trading, please, it's not about I have to trade this RR, I have to trade this RR. We all make our analysis in the market. We all do our analysis. Everybody knows how to analyze charts. But at the end of the day, is how you respect money, is how you manage your trades that will determine your profitability on the long run. I know some people now might come in the comment section with critics that you're killing your edge like that. You're killing your edge like that. You just leave it to run to full TP or this and that. Look, getting stopped out while securing $4 now on this trade, it happens again another time. I will gradually be compounding small profits that could have been losses that will take me in drawdown. Doesn't mean I won't hit stop loss. Obviously, you guys saw my first trade was a loss, but I'm just saying how most of you should learn how to do things the right way and respect money. So that being said, that wraps up this episode 3. If the price goes back up again, no problem, we'll take the trade. Okay, but I don't know. At this point, this is a clean breaker block, but I won't be taking this trade just yet. But I'll let you guys see what I'm going to be doing in everything for now. Until then, I'll leave you guys to eat. Happy learning. Like and subscribe. Peace.